You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose, and today I want to walk you through what I think is one of the most important concepts for traders. And I'm going to break down options versus stock. So many people are still intimidated by options, but I'm going to use this presentation to break it down for you. I'm going to simplify options for you. So by the end of this question, I actually asked a quiz question in our Discord. You're going to be able to answer that question, and I'm guessing you're going to have a much better understanding of how options work. All right, so guys, my name is Jonathan Rose. I've been trading since 1997. I've traded in all the exchanges in Chicago, the Chicago Mercantile Exchange, Chicago Board of Trade, the Chicago Option Exchange is really where I honed my skills to trade options. And today we are going to simplify options for you. Options are stock, stock are options. Options are just a derivative of stock. I'm going to go to the screen. I'm going to break it all down for you guys. I'll also keep up the questions if you guys have any questions throughout this presentation, but this is what I want you to learn. Here it is. Stocks are options. The risks are the same between stocks and options. I'm going to explain that. Before I do, Ken put something awesome in my Discord, but I wanted to share with everybody. Good morning, guys. As a fairly new person, he joined a couple of months ago. My strong advice is to go through JR's challenge before trying to follow everything in advance notice. So the challenge is our step-by-step, teaches you how to trade options, but Ken had 0 options experience before joining. He immediately upgraded to advanced notice, but that's where you're going to go through training. Education mitigates risk. When you trade options, you literally have millions of permutations that you can do rather than just trading stock, which is just binary, buy or sell. So here we go. Why are everyone scared of options? So most traders think options is risky. Doesn't have to be. Options are just a derivative of stock. So we're going to go through examples. A 12-strike call. A 12-strike call is just, it gives you the option to buy stock at 12. That's it. If the stock is at 10, the 12 call, it's an option. You buy that. If the stock's at 11.50 at expiration, no thank you. You're not going to sit there and be long. You have the option to be long. You don't have to be long. Okay? 12-strike call explained. Stock's at 10. Okay? Stock's at 10. The 12-strike call. Let's buy for 50 cents. Okay? It's $50. Okay? You're only risking $50, but if it gets above 12, you're going to be long 100 shares. If that stock gets up, down, and gets to 11.50, it expires, you lose whatever you bet. That's it. Nice and simple. But look, if the stock rips to 14, your call is worth $2 minus the 50 cents you paid. So it's worth $1.50. Right? Easy peasy, lemon squeezy. They don't have to be complicated. Options are just stock. Stock is options. Options are a derivative of stock. Let's say the stock rips higher. Well, you could sell the 16 calls, okay? Stock's at 10. The 12 calls, 50 cents, right? Fine, we just did that. Let's say the stock rips higher. It goes to 12. Now it goes all the way up to 16. What if we sell the 16 calls? Okay, now we're long from 12 and we're short from 16. That's it. What's the most that you can make on that trade? $4, right? It's just the difference between the stock. So if your long call's at 12, you could sell a call at 16. You're just long stock and short stock. It's really, really straightforward. What would the profit be? Well, $4 less whatever it is you paid. Okay? Nice and simple, nice and straightforward. Let's say the stock rips higher again. What if we sell stock at 12? Stock rallies. Your 12 strike calls are deep in the money, right? So stock's at 10. 12 calls gets us long stock, right? Well, let's say the stock keeps on ripping to 16. What if we sell 100 shares of stock at 16? We're long calls from 12. What do you make on this trade? $400, right? Did you guys know that if you're long calls, you could sell stock to get out of your calls? It's pretty cool. So we were talking this morning in Discord about liquidity. You don't need options liquidity to get out of your trade. You could just use stock liquidity. So I'm going to show you my Discord right now because I put this question in our Discord community this morning and nobody's answered it yet. Here's the question. We're using AMSC. If we're long the 40 strike calls and AMSC rallies to $100, if there's no options liquidity, how do you get out? So if AMSC rallies to $100 and we're long the 40 strike calls, the stock rips to 100, but there's no options liquidity. How do we get out? What do we do? Sell stock. Think of it. Your long 40 calls, they're just long 100 shares of stock for each one that you own. If the stock rips to 100 and there's no options liquidity, the options shut down, you could sell stock because you own the stock. It's the same thing. And that's the most important thing, really. And if I was going to do this and just show it to you what it looks like on paper, you're long the 40 calls. Okay? If you're long 10 times, you're long 1,000 shares. Stock rips up to 100, sell 1,000 shares. And you are flat. Because you're long 1,000 from 40, you're short 1,000 from 100, and you just locked in $60,000 in this example. Ernie, great question. So in this example, you're saying that there's no options liquidity at all, and you just want to get out, so you'd have to go to the stock. But that's a game time decision, really. If something's ripping and you want to lock in a level right there, selling stock is the easiest way to get out. So what this lesson really comes down to, though, is education mitigates risk, but options are stock. Don't let options intimidate you at all. Hey, Michael, if trading an IRA, would you buy puts? No. There's no puts being discussed in this discussion. When you're buying puts, you're buying volatility. I would absolutely not do that, Michael. Did you guys get a chance to watch the Profit Surge event, guys? If you didn't, this is still going to be up for a couple of more days. Well, what I always do now is this is the free portion of the video. I always branch off to our all access portion. So let me just drive one more slide. Less risk, more reward. Define risk. We want to know the max loss before every trade. Leverage, smart. Control $1,000 stock for 50. We can profit from ups and downs. what I'm going to do with all access, guys, is look at this trade. SLV silver this morning, 17 million buys, less than a million in sales. Yesterday, SLV saw a $27.3 million trade. So what I'm going to do with the advanced notice community is we are going to tear apart silver and try to find some opportunities to get our butts long silver because smart money is buying. Guys, thanks for watching. Make sure you give a thumbs up, and everybody, investorplace.com/profit surge 2025. I'll see you guys tomorrow. All access, you guys hang on. We'll be right back. Hey guys, hopping back on. What's up, all access? Moving over to the screen. I noticed some of you guys had this trade, which is great.